Welcome to the channel. My name is Jodie Knight. You can find me over on eToro. My live portfolio there is going to be linked in the description down below. But other than that, in this video, we're going to talk about the daily chart, the weekly chart, the short and long-term, long-dated options interest. We'll talk a little bit about my price targets, where I'm going to add, where I'm going to trim. As well as that, we'll look at the general market, what data came out, what data is coming out, and if there's any good Tesla news that we're interested in. Let's just jump straight into it. Right, we're going to fly through this relatively fast. It's a very busy day for me today. We've got SoFi and PayPal earnings, both of which have been quite exciting for different reasons. But I don't want to get off on a sidetrack, so I'll just carry on looking at this chart. So since earnings, Tesla's had a really good move up. We've had this really nice kind of back test. We dipped a little bit lower, right on top of this volume shelf. So this is a really good level to kind of base at. I actually think Tesla's going to make another move up shortly. My one concern with Tesla price action is typically it loves backfills, and we have this whopper kind of here with the volume gap into the volume shelf. Now, from a technical perspective, I would normally say that's likely to feel purely based on what Tesla normally does. And if that's the case, then I'm probably going to buy quite a bit more Tesla because the last earnings call and the event have got me super bullish on the future of Tesla, especially relating to the energy sector and full self drive. So not technically including the robo taxi because I think that's a lot further off in the future, but definitely FSD that's going to start ramping up, I think, and all that good stuff. But other than that, though, we've got the completion of the measured move here, kind of up to kind of 300. I was thinking that would complete this year, but I am actually more leaning towards it completing early next year. However, if Trump wins the election, I do think this is going to complete very quickly, and if not, outpace that. If Trump doesn't win, then there's going to be a slide off, just because they've kind of married each other now. They're committed. They're in it for life. Other than that, though, we just talked about the downside with the gap down here filling to the 220, and then below that we've got actually quite a lot of support here with historical levels and some Fibonacci. But below that, then we probably run the risk of going into the 200 kind of area. I don't think that's very likely. I think those days are gone now for Tesla unless something catastrophic happens. The kind of bigger funds and whatnot are starting to be a lot more forward looking with Tesla, which is normally how it happens. And that's one of the main reasons I like to be in the stock before the fundamentals make the move, because there is always a lot of front running when Tesla makes its large moves. But before it does that, we do have a lot of opportunity to trade the volatility of it. So that's been quite profitable for us, which has been nice. Other than that, though, RSI is kind of coming back down to a more neutral level. So we could have quite a nice move up there. The MACDX Plus looking pretty good. Institutions are really loading up on that one. And the flow is kind of good as well. So, it could go either way. I think this one's going to be really mainly moved by the market sentiment, rate cuts and that kind of stuff, and the elections. I'm just going to take a quick look at the weekly, though we're not going to focus too much on the weekly going forward because they just show kind of more of the same. We did have the bearish divergence, but that kind of voided itself. We had a little bit overbought, but then we pulled back after the 10-10 event, which kind of gave us a nice reset, and then flow's been kind of flat as well. Okay, looking at the open options interest for this one, we can see kind of the same what we're looking at on the charts here. We've got I don't know why that came out so funny, but we've got a lot of interest in pretty much every $5 increment up to $300, which means that's going to be quite a tough one to grind up to. So I wouldn't expect us to be too much higher than that through to the year end into next quarter. But again, the elections can really overwrite that. There could be some crazy pumps coming. Who knows? I think Trump's going to be better short term for the markets. Harris would have taken a while, could have got some good dips. But in the long term, both will see quite a good amount of liquidity come to the market. They're going to need to. They've just got quite different approaches to how they want to do it, and different assets, different sectors will do better, should I say. I've positioned my portfolio to do better with a Trump victory, as that's my expectation, but it shouldn't be too much of a stark difference. Both will need to really do the same. Other than that, though, let's put it our week, see what we're working with. a little bit more variety. I'm not sure. I think this is a bit of a bug in the platform, this box here, 'cause the expected move has gone a bit crazy, but we don't really use that too much anyway. But we've definitely got a lot of support here back at the old lows. 200 really strong support. Like I said earlier, I don't think would be likely to push below that at all. However, there is a lot of interest with some downside on this one, so price could go either way from here. We could get the gap fill. Looks like a lot of people are preparing for that. But let's take a look out to January 2026, 2025 even. Now, I'm going to have to slide this down because I believe the targets are quite high. So 300, like we've talked about, is the popular area that most of the big fish are looking at. But we do have kind of 350 and 400 now. I think that's quite ambitious for January, but stranger things have happened. Unless they, suddenly show up with the affordable car as a event. I don't think that's going to happen, and that's pretty unlikely to happen this side of 2025, I think. But pushing out to January 2026, let's take a ganders. Okay, so we are getting some very high targets for the end of 2026 here. There are still the doom and gloomers, Tesla haters, but Tesla's like Marmite. There's always going to be kind of that downward side support. But again, that's just highlighting 200 is a very strong support below us. But there is plenty of opportunity above it. We've got 300, 350 is a good level there, $400, $500, 510. So things are looking quite bullish from the institutional level on that one in the derivatives market, which is awesome. News-wise, relating to Tesla, we had earnings last week. I was a little bit behind putting the content up on my website because I forgot I had guests over for the whole weekend. But it's up there now at thecraftytrader.com. You can access that for free. It's got a very detailed breakdown. It's got all the goodie charts that you can see on there, and you can zoom in and read the nitty-gritty on there without having to pay to use the visualstocks.com website. But basically, I wanted to chuck up a load of these charts just to show you, despite the fact that there's people still out there today saying Tesla's going to zero. That is, I don't know how you envision that happening. With a cash pile as monster as that, they could probably buy out some of the legacy car companies, no problem, no questions asked. Well, there'd be some questions, but really, these numbers are so impressive. The only thing that is hard not to like is the solar generation. That's something that they're not focusing on, so I'm not too concerned with that. And auto margins are creeping up again, which is nice to see. Net income's getting better again. Shares outstanding's holding flat. Operating expenses are actually coming down a little bit in a time when they're really expanding the business. That's really impressive. Vehicle deliveries are starting to pick up again, and they are wanting to push that really in 2025, which is great. What other charts did we look at? We looked at the key charts as well. Operating margin, what is not to love about that chart? Gross margins by segment. Check out the energy gross margins. Amazing. Love it. Inventory in days of supply. Now, this keeps getting picked up as kind of like a bearish case, but actually, you don't want to be selling people a car and then asking them to wait a year because there's no inventory. It's good to have some inventory there that you can get rid of. Profits per vehicle sold is starting to inflect up again, which is nice. We know now that the Cybertruck is profitable already, which is faster than I was expecting. Supercharger stations is super gone up. Historical margins is looking good again. ASP versus COGS per vehicle is also getting a little bit pinched, but still profitable, and at a time when not really any other manufacturer, aside from some of the Chinese companies, can make a profitable EV. That's pretty impressive. Estimates look good as well. Activity, the shorts are even starting to give up on this one, so I'm not sure why people are still being quite bearish on this one. The only kind of downside is a lot of people are going to look at this one and think it's getting quite expensive, but comparing this to the averages of Tesla itself, then it's not too bad. It's kind of within what they would kind of consider fair value if it's not just a car company. This morning's data we went through in the earlier video, but since then, the JOLTS data came out. Now, that came in lower than expected, and I think if we look in here, it was revised down. I saw somewhere saying. So we had quite a big revision as well. Now, the market didn't seem too fussed about this, to be honest, probably because it's helpful to not pushing up inflation and all that kind of stuff. I was expecting this number to come in higher, though, with seasonality and stuff like that, which is weird. When we looked at the numbers a second ago, I think a lot of this big federal drop here was quite interesting, and also healthcare and stuff as well. So regional distribution job openings dropped in the south 325. So there's some big shifts in the job market going. I don't know if it's to do with being streamlined or whatnot, but the market didn't seem too phased about it. Other than that, though, we got the consumer confidence. That one came in pretty good, actually. The jobs quits as well, fairly in line. I would call that in line, even though they're not bang on the head. Dallas Fed services came in better than expected. We talked about this yesterday, actually, I think it was earlier today, we talked about this in the earlier video, that the services data is going to be the more important of the two between manufacturing and services. Services revenue also ticked down a little bit, but that one's been on quite a nice streak lately. That's a wrap. I know I probably talked a little bit more about the Tesla earnings than I intended to, but if you like this video, give it a share with your mum, your dad, your dog, your horse, your nan, whatever, and I will see you tomorrow for tomorrow's update on SoFi.